All right, so today I'm going to walk through what I would consider like the three most important things in QuickBooks as a new user or someone that's like a small business owner that's just using QuickBooks for their first time and needs to kind of get up and running. So this is typically your landing page. Now, this is a fictitious company that QuickBooks put together. There's a lot of information here, and I'm not going to go over that today. Some of it is self-explanatory, some of it isn't. But what I do want to focus on are the three things. So the first thing is connecting your bank account and your credit cards to QuickBooks. The reason why that's so important is because all the transactions, your day to day transactions that you do for your business, will end up basically coming into QuickBooks. So then you can go and categorize that. So, at a minimum, as long as you're doing that, you're better than a lot of the other people out there that are still doing paper receipts or handwritten notes. So, the way that you would do that is you would go to transactions on the left hand side and go to bank transactions. Now, there's already some connected checking, savings, and credit cards in here, but the way that you would link it originally is by going up here to the link account, clicking on it, clicking on your bank, and going and connecting it. Once you do that, it'll show up here, and from there, you'll start to see transactions like you see here. Now, your transactions might look like this, where you have your most recent transactions first, followed by a bunch of transactions going back into the past. So you'll see how many transactions you have to go in and basically categorize in each one of your accounts. And from there, you can essentially start to tackle that one by one. Now, to help streamline this, I like to kind of group these by this description. The description typically is either like a vendor or a customer or something in like the bank detail, right? That they're basically trying to pull out and give you some information on. So for this one specifically, this one says A1 rental. Okay, cool. So it looks like there's three of them. There's one, two, three. Two of them are cash spent, and one of them is cash received. So the cash received one seems a little weird. So I'm going to click on that one just to see what it is. And it looks like it's a deposit refund. So to me, the way that I understand this is that there was an A1 rental that they spent about $2,000 on, but they got refunded back $200. So you can click through each one of these, click equipment rental, and then add, right? That would work. So I'm going to go ahead and do that for this one. Or you can bulk do it by just clicking on the little check marks to the side, going to edit, making sure that you have a rental, and then you do equipment rental as the account and apply and accept. Both ways are completely doable, but at least this kind of shows you that's how you would start to kind of tackle all of these transactions as they come in. So that's like number one, right? I think that's, if you learn anything and you can go ahead and do this as a small business owner, that's going to be a huge boon for whatever you're doing. Because what I'm about to show you then kind of adds on to this. So the second and third thing are both various reports. The second one will be the balance sheet, and the third one will be the profit and loss statement. So if you click on reports, they're usually, I think I have mine favorited. I don't know if they're like default favorited, but if they're not, then the balance sheet's going to be right here and the profit and losses here under business overview. So let's go over the balance sheet first. The balance sheet is essentially a snapshot in time. So it has all of these like reporting periods. The crazy thing about this, like this actually doesn't matter as much. It only matters your end date. Because if I was to switch this to, let's say, April 1st and run the report, none of the numbers are actually changing. So what this does is it's basically saying, hey, as of September 12th, this is how your business is doing. And it'll pull in, it's saying you have negative cash in your checking account, you have some cash in your savings account, you have some AR, you have some AP. But this essentially gives you a health check of how the business is doing. The signs of something like an over leveraged business is that you have a lot in the liabilities side and not a lot on the asset side. So the more assets you have, obviously the more money you have or the more money coming in. And that's really important, or fixed assets, prepaids, whatever it might be, right? But typically you want a lot of assets and you don't want a lot of liabilities. So anyways, balance sheet gives you a health check of a snapshot in time. And that's really important. So you can kind of see, where am I? How is the business doing? Now that is great, but that doesn't really show you how, like, the activity. Let's say, that might be your snapshot, but let's say you've had a horrible year. You wouldn't be able to tell that you've had a horrible year based off of the balance sheet. The P&L, would be able to essentially come in and show you this. So the P&L is structured in a way where it basically goes over a period of time. So if you were to switch this date, it actually does have an effect on the numbers here. I think because it's a sample account, it may not, but just know that 99.999% of the time you switch the dates, these numbers are going to be completely different. So assuming that, right, you can say, all right, so here's my income as of this year. Now, most companies have what they call a fiscal year. Actually, all companies have a fiscal year, and most companies have their fiscal year match the calendar year. So what that means is that a company would essentially have their accounting period be between January 1st and December 31st. There are some companies that have off calendar year ends, and that's fine, and we're not going to discuss that. But as a small business owner, most of the time you're going to line up as December 31st being your year end. So going through, you can see, all right, you got your income. That's going to be like your revenue, the money that you're making on whatever you're selling. You got your cost of goods sold. That's the costs of basically bringing that revenue to your customers. And then you have your gross profit. That's the difference between these two. Then you'll basically from there have SG&A expenses. You might have some R&D expenses, but your expenses fall beneath your gross profit. These are non-cost of goods sold expenses. Then basically the difference between those two would be your net operating income. You might have some miscellaneous expense, some depreciation, some amortization, whatever it might be. That would fall underneath net operating income because those are expenses that are not needed to run the business. And then from there, you basically get to net income. And that's essentially what you, quote unquote, have made for this period. So it's really important to understand kind of the distinction, again, between the balance sheet and the profit and loss statement, because the P&L is basically all of the activity that you've gone and done throughout a period of time, where the balance sheet is just a snapshot of where you are. Both of these are backwards looking statements. It doesn't bring in any forecasted sales or activity. It doesn't say, oh, next month you're going to have a really big sale, so we have to include that in here. It doesn't, right? So this is all backwards looking. That's more of a finance thing to look forward looking. So anyways, 3 things again to kind of think about, and learn from this video. If you learn nothing else about QuickBooks, is that you should 100% link your bank accounts and credit cards. You should look at your balance sheet to kind of get a snapshot of where you are from a health perspective for the business. And your profit and loss statement helps show you the period activity depending on what period you pick. I hope that was helpful.